As two of the largest economies in the world, China and Europe have a significant impact on the global economy. Over the past few decades, trade relations between these two regions have grown exponentially, with China emerging as Europe's second-largest trading partner after the United States. However, with ongoing political tensions and economic uncertainties, the future of trade relations between China and Europe remains uncertain. In this documentary, we will explore the current state of trade relations between these two regions and the potential implications for the global economy. The current state of trade relations. In 2021, China was Europe's largest source of imports, with a total value of €383 billion. The EU, on the other hand, was China's second-largest trading partner after the United States, with a total trade value of €586 billion. The two regions have become increasingly interdependent, with European companies relying heavily on Chinese manufacturing and Chinese firms seeking access to European markets. However, the relationship between China and Europe has been strained in recent years due to a number of factors. Political tensions, human rights issues, and concerns over intellectual property rights have all contributed to a growing sense of mistrust between the two regions. In addition, the COVID-19 pandemic has highlighted the vulnerabilities of global supply chains, with many European countries looking to diversify their supply sources away from China. Despite these challenges, trade between China and Europe continues to grow. In December 2020, China and the EU signed a Comprehensive Agreement on Investment, CAI, which aims to create a more level playing field for European companies operating in China. The agreement includes provisions on market access, investment protection, and sustainable development. While the CAI has yet to be ratified by the European Parliament, it represents an important step towards closer economic ties between China and Europe. The implications for the global economy. The future of trade relations between China and Europe has significant implications for the global economy. If tensions between the two regions continue to escalate, it could lead to a global economic slowdown. A trade war between the two regions would not only disrupt global supply chains but also lead to increased tariffs and trade barriers, which could harm businesses and consumers on both sides of the Atlantic. On the other hand, if China and Europe can find a way to cooperate and build closer economic ties, it could lead to increased economic growth and stability. The CAI, if ratified, could provide a framework for greater investment and market access between China and Europe. This, in turn, could lead to increased trade and job creation, benefiting both regions and the global economy as a whole. Another potential implication of closer trade relations between China and Europe is the shift in global economic power. As China's economy continues to grow, it is likely to become an increasingly important player in the global economy. If Europe can build closer economic ties with China, it could help to offset the economic dominance of the United States and create a more multipolar world order. Possible challenges to closer trade relations between China and Europe include political and security issues, as well as concerns over intellectual property rights and market access. The EU and the United States have also been coordinating their policies towards China, with both regions adopting a more confrontational approach towards Beijing. This could complicate efforts to build closer economic ties between China and Europe, especially if the United States continues to push its allies to adopt a more hawkish stance towards China. Moreover, China's Belt and Road Initiative, BRI, has raised concerns among European policymakers, who view it as a strategic tool to expand China's influence in Europe and beyond. The BRI, which includes infrastructure investments, trade agreements, and cultural exchanges, has been criticized for lacking transparency and promoting debt diplomacy in developing countries. European leaders have called for more transparency, reciprocity, and sustainability in China's BRI projects, which could complicate efforts to deepen economic cooperation between China and Europe. Despite these challenges, there are opportunities for China and Europe to cooperate on a range of issues, such as climate change, digitalization, and public health. The COVID-19 pandemic has highlighted the importance of global cooperation and coordination, and China and Europe have a role to play in shaping the post-pandemic world order. For example, China and the EU have pledged to work together on vaccine distribution, trade facilitation, and global governance reform. Such cooperation could build trust and confidence between the two regions, creating a more conducive environment for economic cooperation. Another potential area of cooperation is the digital economy, which is expected to be a key driver of economic growth and innovation in the coming years. Both China and Europe have ambitious plans to promote digitalization and artificial intelligence, and there are opportunities for collaboration in areas such as data protection, cybersecurity, and digital infrastructure. This could create new business opportunities for European companies in China and vice versa, while also promoting the development of new technologies and standards. One factor that could shape the future of trade relations between China and Europe is the changing global geopolitical landscape. With the rise of China and the growing rivalry between the United States and China, Europe finds itself in a delicate balancing act. On the one hand, Europe wants to maintain its economic ties with China, given the significant opportunities and benefits that come with closer cooperation. On the other hand, Europe does not want to jeopardize its security or strategic interests by becoming too dependent on China or antagonizing the United States. Another factor that could shape the future of trade relations between China and Europe is the evolution of global governance and the rules-based international order. China and Europe have different visions and approaches to global governance, with China promoting a more assertive and alternative model based on non-interference, state sovereignty, and economic pragmatism, while Europe emphasizes human rights, democracy, and multilateralism. As the United States withdraws from its leadership role and other actors such as China, Russia, and regional powers assert their influence, there is a growing need for cooperation and dialogue between China and Europe to shape the future of global governance. One area where China and Europe could make significant progress in their trade relations is sustainability and climate change. Both regions have made ambitious commitments to carbon neutrality and environmental protection, and there are opportunities for cooperation in areas such as renewable energy, green finance, and sustainable infrastructure. China is the world's largest emitter of greenhouse gases, and its efforts to transition to a low-carbon economy will have significant implications for global climate goals. Europe, as a leader in green technology and innovation, can provide expertise and resources to support China's transition while also promoting its own economic interests. Finally, the future of trade relations between China and Europe will depend on the ability of both regions to address their structural challenges and reforms. China needs to address issues such as market access, intellectual property rights, and state-owned enterprise reform, while Europe needs to address issues such as regulatory barriers, digitalization, and competitiveness. Both regions also need to address the rising social and economic inequalities that have fueled populism and anti-globalization sentiments. In order to realize the potential of closer trade relations between China and Europe, there are several steps that both regions could take. Firstly, there needs to be a renewed focus on dialogue and communication, both at the political and business level. This could involve regular high-level meetings, joint initiatives, and cultural exchanges to foster mutual understanding and trust. Moreover, there needs to be a greater emphasis on transparency, reciprocity, and fair competition, which can help to address concerns about market access, intellectual property rights, and regulatory barriers. Secondly, both regions need to promote innovation, entrepreneurship, and digitalization, which are key drivers of economic growth and competitiveness. This could involve joint investment in research and development, collaboration on standards and regulations, and the promotion of entrepreneurship and startups. Moreover, there needs to be a greater focus on education and skills development, which can help to prepare the workforce for the challenges and opportunities of the digital age. Thirdly, both regions need to promote sustainable and responsible investment, which can help to support economic growth while also addressing environmental and social challenges. This could involve promoting sustainable finance, green bonds, and social impact investment, as well as promoting sustainable infrastructure and renewable energy. Moreover, there needs to be a greater emphasis on corporate social responsibility and stakeholder engagement, which can help to build trust and credibility among consumers and investors. Finally, both regions need to work together to address global challenges such as climate change,